Okay, so let's go to see what's going on. Wild, wild moves in the overnight markets. Today, I should start with today is Monday, March 23rd, 10:42 a.m. Pacific time, and anyone who has a position on in the markets is already well aware of what's been going on overnight or what's happened. But just in case you don't know or you missed it, let's take a quick peek. So at 4 a.m., these are 5-minute candles. The
Market data
e-minis,
connection lost.
the e-minis had a huge, huge rally last night, which was yesterday afternoon when
Market data
I
connection
started
reestablished.
to open up the platforms and see what was going on. E-minis were down 40, and then they just had a gigantic rally. SPOOs gapped open higher. Currently up 86 handles in the SPOOs, roughly that same amount in the E-mini. Bonds have also rallied some, and crude oil has had a sizable move to the downside. I believe that the source, the catalyst for these big moves was something that came out in the news cycle pertaining to what's going on in the Middle East. I'm not going to talk about geopolitics, but obviously anything related to that can have create a move, a sizable one at that. All right, so that being said, I guess one of the first things I'll go over is I had on an oil trade, and I'm using Tasty. I opened up a new account to use for options on futures mostly. I do have a couple of other things that are not that, but this is what it's going to be used for. I opened it up 2 weeks ago, and it's a small account. I put $5,000 in there, and they gave me the full credit of $5,000 on the finger, so I was able to fire right away. That being said, let's look at an option chain here, or the order chain. So I had on a put spread, the April 16th expiry, the 79.78. I sold that for 35 cents, and that was on the 9th of March. 2 days later, I added a butterfly for some protection down there. That cost me 17 cents. So it left me with a credit of 18 cents. Vol went down. I'm not going to go through the details of the P&L attribution of this part of the structure, but the butterfly down here ended up going to 40 cents. So bought at 17, sold at 40. I took that profit and I maintained the short spread that I had at 79.78, which again I sold for 35 cents. Last night I had an order in to cover it, and I did get filled. Actually, I probably placed the trade shortly after the market opened, 3 p.m. Pacific time. I got filled later in the evening at 8:12 p.m. for 17 cents, and that spread that I sold for 35, I was able to cover it for 17 cents. It's a good thing I did I was able to, because later on, several hours later, we had this huge, huge drop in crude oil. Let's see what we have here, roughly from high to low. Looks like $14.26, $14.26. So this is a huge move, and even from the low to an intermediate high retracement point, that's still sizable. What do we have? 84.37, 84.37, almost $9 move from low to the intermediate high. So as you can see, there's been quite a bit of volatility. But anyway, I was fortunate enough to get a fill at 17 cents because the spread that I got filled on is currently going for, it's got to be 30 something, I imagine. Let's take a look. 79.78. So 35 cents. So it's currently going for 35 cents, whereas half a day ago, roughly, it was half of that, 17 cents, or almost half. All right, so that was a fortunate fill. Bonds rallied. I had a short put spread there. This was an old position, and maybe a week or so which I sold the 6,200 put, and I decided to cover, well, I added on to it by turning this into a put spread. So I bought the 6,150 for 54, and I sold the original 6,200 for 68. So I'm sort of taking some profits here. And I say sort of because I'm not out of the position. I just went from a naked put to a put spread, which is fine. All right. Over the weekend, last Friday, 3 days ago, I decided to take some weekend risk via a butterfly, a broken wing butterfly in the SPX. So there's options on index, not options on futures, but it looked pretty good to me. So I have a put spread. I bought the 63 even, 63.20, and I sold the 80 even. Now note that the width here is 20. Well, now I sold the 70 even, and this is what I did to sort of cover it or harvest profits and take some risk. Okay, I sold this spread 30 by 20. So I'm long the even 20 and I'm short the 70 even. So note there's a 30 by 20. I was able to do that for a credit of $1.65. And then I basically converted it into a butterfly, an equidistant butterfly. So I rolled the 62.70 put up to 80 for 90 cents, giving me a credit of 75 cents on this butterfly, and this is fine. I like having this because it expires in a week and a half. I have coverage to the downside. The max profit on this, the difference between the widths, so I can get $2,000 plus the credit of 75 bucks I have on that. If we look at the analysis tab, okay, so it's showing something different because it doesn't track any adjustments you make to these positions. That's why for a number of positions that I want to track more closely, I'll recreate them on an Excel spreadsheet, and that way I can follow along in more detail what the P&L will be. But in this particular case, it would be the $2,000 if it expires, pin the tail on the donkey, plus the credits I have of $75 for the trade. Or if I'm extremely lucky and it pins at 6,300, then I can make max profit on this. So fine. It's all fine and good. Again, I opened this account up just about 2 weeks ago, basically 2 weeks ago, and it's currently up a little bit of money, so that's fine. I'll take it. I was fortunate to catch some moves here, particularly in oil. And I have something else going on. So this unbalanced condor was initiated for a credit. Note, I was able to sell the 35-40 spreads, 2 of those for a total of $1, 50 cents each. And in addition to that, the long spread at 66.8085, I was able to purchase for 85 cents. So this structure right now, this unbalanced condor, has an embedded credit of 15 cents, $15. So anything else that I can add to it is just pure profit. I'm going to need a little bit of help. The market's going to have to approach the 80.85 long spread for this to get interesting. Let's see, it's currently, this spread's trading for 90 cents and this spread is trading for 15 cents. So I could get it off right now for an extra, if I wanted to close it, which I don't want to do, I could close it for an extra 60 cent credit. But again, I'm most likely going to try to turn this into a butterfly or a condor by selling a spread close to or directly adjacent to this 80.85 area, and I can either close this or turn it into a butterfly. We'll see. It really depends on where prices land. We still have time before the market closes today, and then I have possibly all day tomorrow to work this one out. Okay, that's going to be it for today. Thanks for tuning in. I'll catch you guys next time.